everybody. This is Basil Chapman. Tom O'Brien's not here. I'll be sitting in for him right now. So the Dow closed down 10 at 25,792. Intraday, it hit 26,086. Can you believe that it's had a 1,000 points, the quickest I've ever seen a 1,000-point move in the Dow? That's gone from January the 6th, I believe. Yep, there it is. 25,000. There it is. So, yeah, January the 5th. And here we are. It closed at 25,792. Sharp pullback. Very interesting intraday move. It gaps up, spikes powerfully higher, goes 240-something points higher, and then pulls back very sharply. It drops. In fact, it goes from 26,086 down to 25,702. And then it closes at 25,792. So, make it real easy. This is the daily chart on the left. In the middle is the weekly chart. On the right is the monthly chart. On all the charts, you'll see I have what's called the MACD, the moving average convergence divergence, the slow stochastic, and the blue line is the unbalanced volume. Tom likes to use volume. I use a cumulative volume. In other words, if the Dow closes down, you subtract the total from the running total, and if it closes up, you add as a running total, you just add it. And you can see it just turned down here for the first time. I said to subscribers to my opening call, my service here at TFNN is I have the noon to 1 p.m. Eastern time slot. That's called the Tiger Technicians Hour. And my daily service, my daily newsletter, very comprehensive newsletter, is called The Opening Call. In my opening call, I say, we've got to watch this real closely. And one of the reasons we've already started on last week, on Friday, we started to buy a little insurance on the Dow because we have 7 long positions, all of them doing really nicely. We need to just kind of protect that. I said we're not treating it as a trend right now, but it's the start of a potential turnaround. We'll see what happens. So the daily chart, the technicals are very strong, just hinting that there's a little bit of a pullback here. The weekly chart is still extremely strong in all the technicals, just a hint that there could be some kind of volatility coming up based on the relative strength and the unbalanced volume turning down a tad. And the monthly chart is still really powerful in leg E. When you're looking at these notations, just keep in mind that it's a real simple technique I have. I try to identify the lowest low bar, and you merely count each successively higher bar. 4 peaks later, alphabetize them alphabetically in sequence. At D, other things can happen. It can go E, F, and even G. But D is where you start to look and say, okay, what's going to happen here? Well, we went to a D back on the December the 4th at 24,534, held this 9-period moving average. Look at this black line. This is the 9-period exponential moving average. Look how strong it has been in the daily chart. Look how strong it's been in the weekly chart. And look at that monthly chart, way down 23,290. So for subscribers, we have a small long position in the Dow from the 22,290 level, still holding that as a core position. Now we've got a little bit of a short position to see if we can take advantage of it. Let's just run these through. So the key level, 25,400, is the 9-period moving average that needs to hold in the Dow. The S&P down 9 at 2776. Also ran very sharply higher, went to 28,000, 2807, I keep saying that. It's 2807, and it closes at 2776. The level to watch, 2751, 2,751. A close under that will be the first time it's closed under the 9-period moving average. Actually, it's only the second time since it broke out above that 9-period moving average way back in November. So it'll be quite something. Weekly chart is still strong. Let's go to the QQQs because of the index 100. There was a trend line that I showed subscribers over the weekend. This trend line right here, it hit it almost exactly at 166.41, closed down 25 cents at 164.24. That's over 2 points lower. Watching 162.20. A close below 162.20 says, timeout coming. Weekly chart still very strong. Monthly chart very strong. IWM is the Russell 2000, goes to a peak E, pulls back very sharply from that E, but it hasn't made a peak yet. and we're going to be watching this. The level to watch is at 156.40, down $1.75. Anytime it closes under 155, I'd say be careful. The Russell 2000's in a little trouble. I still see a little residual strength. How it's going to play out, we'll see. Gold. Gold right now, down. It's up 4 at 1339.1. It should still go to that leg D. Remember, we're talking about fourth leg higher. This should go to a leg D, maybe tomorrow, the next day. Watching this closely because it's making a cup formation in the weekly chart that says it should hold 1325, because if it goes under that, 1317 is going to be really important support. However, the weekly chart says that if it can push into the 13, it's at 1339, if it can go to 1347, 1351, there's a real good chance it's going to try for the left side high of the week of the 8th of September at 1366.9. We can have an expert on the commodities coming up in a moment. We get Andy Hecht. In the meantime, let's look at the dollar. The dollar tried to rally earlier on, kind of failed. It's at 90.39, down 3 cents. It made this arch formation. I just want to talk about this for a moment from my CD introducing the Chapman methodology. There's a pattern that we call the dreaded HY, because if on a down move, it makes an arch formation and takes out the left side low, it can keep going lower until maybe it bounces and has an even bigger cup formation. So let's just get out of this and I'll show you something very interesting. Look, right here. This is Bitcoin. Look, there's an arch formation right there. Arch formation, it fails. Another arch formation, it fails. Here's another one. I had a caller this morning on my show. I said, let's be careful. If it breaks underneath 10, I think 10,810 could go lower. And here it is down at 10,717. So this is it's a viable pattern that if you learn how to use it, it can be very helpful in the analysis. So the dollar looks like it wants to go down to the 89.65 200 period exponential moving average, going way back, and that's in the monthly chart. And wow, it hasn't been there for a very long time. So I wanted to show the TLT, which is the bonds, the 20-year Lehman T-bond at 125.04. If it bounces to the 126s, we might see money come out of equities and some of it go into the fixed income. I'll be back straight after this break. Basil Chapman sitting in for the one and only Tom O'Brien. Be right back. Dow was down 10, S&P was down 9. Right.